let's talk about the tops. There are 6 ways that markets top out in declines. But you know what? Before I do that, guys, before I do that, what I want to make sure you understand we're talking about here, let's draw this cycle again. And I want you to understand we know this cycle is broken up into 4 parts. I want to take you to this part of the cycle right here. That part of the cycle. It's the 3 top part of the cycle. I want us to become experts at reading that, knowing that the probability of a reset in your market, a reset in your stock, a reset in your options, a reset in your Forex contract, whatever you're trading, a reset is due because you're able to read that part of the cycle properly and play it properly. There are 6 ways markets top out in that part of the cycle. Let's cover them. Type top number 1. There are 6 tops from that 3 position. Now remember, we're talking about this right there. Okay? 1, 2, and 3. Here's 3. Okay? Here's 2, and let's say here's 1. Top out, this is what I call the steeple top. It will literally just be a run up and then almost an abrupt stop, as if your run has run into a brick wall, created a steeple like the steeple of a church, and boom, drops to the downside. And the way I used to demonstrate this for my trading kids is I want you to think of this as a steeple top or a cemetery where this stock is about to get lowered down into the ground. Boom. Okay. All right. Either way you look at it, steeple top. All right. Now, this is not the most common top. It's actually a little more common on the bottom, because everything I'm explaining to you is also applicable for bottoms as well. So the steeple top, the reverse of a steeple top, is a V bottom. So the reverse of this top would be a V bottom, like this. Boom. That would be your V bottom. This is a reverse V or a steeple top. Top, bottom. All right? But we're focusing on the tops here today. Now, the bottom V's happen more consistently than the top V's. The top steeple tops are not as common as the bottoms are. So this is probably, I still want you to be able to read it, but it's going to be your least frequent occurring top. The abrupt stop and the collapse, the immediate collapse to the downside. You'll see it, but not as frequently as what we're going to cover next. Now, the most prevalent top you will see is the double top. This is the most prevalent top after a run-up in all markets or in any individual markets. The double top is the most frequently occurring top. It is also happens to be the most powerful top, meaning that moves to the downside from double tops will tend to be the most powerful. All right? And basically what a double top is made up of is simple. It's an initial drop, right, that really starts some degree of concern. This is important. This drop is usually deep enough to cause some concern. All right? And what happens is that you leave some people up here wondering, oh my God, especially the people who have just bought in near the top. They bought in near the top, and this thing has dropped sharply from their buy point. And they're like, wow, am I in trouble? Did I buy at the wrong time? Then the market starts to come back on them, and they often will decide, once they get a good portion or all of their money back, they will decide, you know what? I'm out. This was scary enough for me. I'm out, creating sell pressure. So these people begin to sell, all right, causing what's commonly referred to as a double top, all right, and the collapse happens from here. This will be your most common top, the most common top you see. But the elements that I want you to understand is that this should actually be drawn a little bit deeper. This drop should be, it's not always concerning, but the more concerning, the better the odds that you top out near this first top there. There's your double one, and boom. Now I'm going to teach you to come into this play here to profit from the 4 leg. If this was the 1, this is the 2, your double top is the 3, you're going to ride the 4 into a 1 again. All right? But we have to be able to read the tops. So remember, you've got your steeple top, which is not all that frequently occurring, but it does happen. Then you've got your double top, all right? Your steeple top, I'm going to teach you to come in somewhere around here. I'm going to teach you the event that you're going to look for there. I am going to teach you in the double top to come in around here, okay? So that you profit from the 4. That's resetting the stock, resetting the market, repricing, I should say. All right. And then there is number 3. There's the what I call the left shoulder double top. So what you have in the left shoulder is higher. So it's not a true double top, because the left shoulder, here's the right shoulder, the left shoulder is higher. So what you have in this scenario is you've got a sharp drop that causes concern. You are leaving people up here wondering, did I make the wrong move? What's going on? All right. They are at a loss here, but the market starts to narrow their loss and narrow their loss and narrow their loss and narrow their loss, but it doesn't quite get all the way back to the top. And boom, you get this event here, which I'm going to teach you, that tells you you're not going to get the normal double top. This is going to be a lower top play that kicks you into this stage 4. All right. So drop and boom, not all the way back to the top. Okay. So that's the left shoulder top. And of course, you have the right shoulder top. Now, this is really quite interesting, because this is also a very powerful top, because what it does is it traps traders, that new traders that believe in a brand new bull run. It traps them in the play at a new high. So let me explain this to you. So you have this run up here. All right, here's one. You have this major run up, and then the stock cracks, leaving these people once again questioning, did I do the right thing? Am I going to have to take a loss? The market starts to narrow their loss, and actually it doesn't fail at or before. It goes through the high, all right, giving these people renewed hope. They often buy again. Others come in to buy the new high. all right, only to have this a failed new high that breaks back to the downside. Okay, this traps a lot of people in this what's called a false new high. A false new high. Okay, I'm going to teach you to come into this around here when you're right back under the prior high and you have the proper event. Okay, now again, the key elements that you want here: a concerning drop, a rally all the way back that takes out the prior high, usually not by a large margin, and then an immediate failure back below the prior high. Many people here in this area are trapped and they will start selling out of their play at a loss, causing your stock to accelerate to the downside. All right? That is right shoulder top. So once again, you've got the steeple top, you've got the double top, you've got the left shoulder top where the left shoulder is the highest, and you've got the right shoulder top where the right shoulder is the highest. Okay? Now, number 5, you've got the 5 flat top. You've got number 5, the flat top scenario, where it looks like it's going to form a double top here, but it actually comes back, and you start to get this multiple top like formation in the form of a relatively wide sideways movement. So it initially looks like it's going to be a double top maybe, but it comes all the way back again and then drops again. And so once you get the third one, meaning that this is 1, this is 2, and you get a number 3, you're in a number 5 type top where you are vacillating back and forth, and the crack comes here where you break through the area of vacillation. All right? And so you have your 1, 2, here's your 3, your 4, your bear market 4, and then you repeat again. All right? And that is number 5. Now, some traders say, well, Oliver, what if this breaks out and moves to a new high? What is that? Well, that would prove that this is not a top. So let me give you some clues as to determine what's a pause versus a top. See, we're talking about a top, but there is something called a pause that has similar characteristics of a top. And I don't want you getting fooled by pauses versus tops. Notice the difference in my drawings here. Notice the top and notice the pause that I'm drawing. The pause is tighter, the pause is narrower, the pause is more controlled, whereas the top is a little wilder, whippier, wider, looser. Tops are looser than pauses. Pauses are tight, they're contracted. They're almost like coil springs that can continue to catapult you forward. Everything I'm explaining here is also applicable on the downside, traders. So you can drop and pause and boom, continue the drop. But if you drop and you're like that, that's usually a bottom, okay? Wilder and whippier, and you break, and that's usually a bottom. Whereas that this tight, coiled, narrow is usually a pause, and you're not done with the downside. So you can drop, pause, drop, bottom. Okay? Same thing on the upside. You can actually run up, pause, run up, pause, run up, and top. They have different qualities to them. These are pauses, and this one's your top. And if you break, you know what's next. You're moving into 4. All right? That is top number 5. Okay? And then top number 6, you get sometimes, it's this sort of rounded, sloping top. It's not a V. All right? So it's not a V. It's not a double top. It's not quite a sideways top. It's rounded. Boom. Okay? And this rounded top, I would say that it's not the most frequently occurring, but it's more frequently occurring than the steeple top. So you still should know it. We need to know all 6 of the tops. Now, let's review all 6 of them. You've got the steeple top, you to the far upper left. You've got the double top. All right? You've got the left shoulder top, where the left shoulder's higher than the right shoulder. You've got the right shoulder top, where your right shoulder is higher than the left. You've got your basing top, where your stock is basing and vacillating back and forth from the top. There's this tug of war between the groups of traders that still believe the stock's higher and a growing group of traders that believe, no, we're topped out. And they're tug of war, and it's a tie right now until you get, boom, you break that. And then you have the rounded top that is a little bit more gradual, and boom. All right? And guys, I will tell you this. Listen to me carefully. There is no other way for a market to top. The value of knowing your 6 different type of tops is the values embedded in the fact that you will never be thrown by what if your market is topping or not, because no top can form unless it's one of these 6. If it's not one of these 6, it is not a top. If it's not forming one of these pictures that I've drawn from you, it is not a top. It's temporary. It's not a top. All tops fall from these 6 things. So what I want you to do is I want you to take a snapshot of this slide right here. Take out your phone, take a snapshot, or come back to this point in the presentation at some point in the future, and I want you to mark these 6 pictures down. Knowing the numbers of people on the planet that consciously know there are only 6 ways a market can top and start moving to the downside. All right. I know each one of the 6. The numbers of people on the planet that know this is not very great. That's a very, very small number of market participants that consciously know this. And if you consciously know that the only way a market can start moving down and resetting itself is from one of these 6 pictures, and you know what starts that picture, which I'm about to get into now, my God, this is one of those parts of trading. This is one of the parts that makes you more elite than the majority of traders. All right? There are a certain number of things that separate you from most other traders. This is one of them. Another one is stop adjustments, which is not the topic of our talk today, but stop adjustments is another one of those categories that separate you from almost all of the traders. Knowing the 6 tops and how to hit them is another element of trading that elevates you way above the majority of market participants out there. All right. All right. Now, let me know so far, guys. Do this for me. I want to know if you understand what we've covered so far. You got this? Talk to me. I want to see your comments. I want to see your comments. All right. You got it? Whoa. Wow. Awesome. Boom. 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 Good. Now we're gonna get to charts. All right. I promise you, we're gonna get the charts here. Good. Yes. I want you to be more elite, just as a follower, just as a trader of mine. I want you more elite. These are the specific things that make you more elite. All right. Good. Good. Now, okay. So why don't we go in the right top? So the three things that I want you to there are more things, by the way, but the three things I want you to predominantly be aware of are bare elephant bars from the top. So a bare elephant bar is nothing more than an elongated, powerful red bar down. Boom. Like, think of if a bar could make a sound, it would make a boom like that. Not boom, boom. No, a bar that makes a heavy, powerful sound. Boom. All right. That's an elephant bar. Now, a topping tail bar is by definition a small body. This is a big body, but the topping tail bar is a relatively smaller body with a relatively long tail on it. It doesn't have to be super long, by the way, but it has a tail on it. All right. So think of shrinking the red down. Like, think of taking this red and shrinking the red down to about here. And what do you have left over? You have the shadow of what used to be left over. You see, this topping tail bar was a red bar. It was a green bar at first. It was a green bar, actually. But what happens is that as it's going down from the high, that downward movement is really the color red. But the point I'm trying to make is that this is a downward movement. You get the color at the bottom, but it's a downward movement from the high. These are downward movements from the high. The stock traded up here at one point. It moved down from the high. So I often refer to these bars as sort of like bare torpedoes as well. They sort of look like a torpedo. All right. Now, the topping tail bar, let me just tell you this. The elephant bar, and I need you to write these numbers down. The elephant bar from a top, the bare elephant bar from a top has about a 70% success rate or follow through rate, right? You'll see I use them interchangeably. Success rate, follow through rate. What I mean by follow through is that you follow through with more red after this red. So there's more red to come. That's what I mean by follow through. All right. 70% of the time. Now, what does 70% mean? It means that if you were to do 10 bare elephant bars, on average, 7 out of the 10 will produce more red after the elephant bar has formed. Okay. So 7 out of 10 go lower. All right. Now, on the topping tail bar, you get about the same. It's actually maybe a tiny bit less, but it's so tiny. Let's just call it the same. So this is about a 70% follow through rate as well. All right. And just so you know, guys, I try to isolate for my traders the things that are 70% and above. All right. I don't teach. There are many things that have a 50% follow through or success rate, 60% follow through success rate. I don't teach those things. And there's a lot of them. What I try to do is zero in on 7 and above, 70% and above. I want you winning 7 times out of 10, 8 times out of 10, 9 times out of 10. I don't want you winning 6 times, 5 times, 4 times. I want it 7 and above. So everything you will ever hear me speak to you about, you can be guaranteed it's 70% and above success rate, okay? So your tail bar, remember, we're talking about the cycle. The tail bar has a 70% follow through rate. Now, 70%, 70%, 90%. Dual, or I'm going to say dual or more, because sometimes you might get triple tails as well, which count. So it's dual or more tail bars. You're in the 90 percentile. This is one of the most guaranteed topping formations you will ever experience in the market. This is the type of formation where you go to your neighbors, you go to your relatives, you borrow as much money as you possibly can and bet the farm. Now, I'm only teasing. I'm only teasing. All right? This is edutainment, so it's not trading advice. I don't want anybody to, Oliver, you said. No. But what I'm saying is that this is going to be the most reliable of any topping sign you can get. Okay? The dual or more topping tail bar from that 3 position. 90% of the time, you get a collapse, you get follow through, you get more red to come. Very, very powerful. All right. Now, I show you this dual topping tail bar with conflicting color because I want to demonstrate that really the color of the body doesn't really matter. I don't care if the little body at the bottom of my tail is green or red. It can be green here too. It's the tail portion that has the power. The power is in the tail. It's not in the body. So I don't really care which one it is. There's a small, slight, almost insignificant difference. All right. So obviously red is better if you're looking to go down, but it's so negligent that I want you to consider the colors equal as long as the tail is strong. If the tail is strong, you're going lower a high percentage of the time. I don't care what color the body is. All right. So 70%, once again, 70% follow through, 70% follow through, 90% follow through to the downside. From position 3, listen to me carefully. If you take any of these bars, guys, I'm talking about position 3. There's position 3. If you put this there, it doesn't have that. It doesn't have 70% follow through. Even if you put it here, it doesn't have, it has the highest rate there. Do you understand? All right. In 3, this is powerful in 3. This is extraordinarily powerful in 3. All right. So I want you to understand we're talking about the top of your cycle, the top of the top of your cycle, the top of your atom. So remember when I told you that there's the steeple top. So what I'm showing you now is that you can have a steeple top that is, the top is locked in or formed with the bear elephant bar You can have the top that is locked in or formed with the topping tail bar, or you can have the top that is locked in or formed with the dual or triple tail bar. 70% follow through rate, 70% follow through rate, 90% follow through rate. All right. Now, do I show you another one? No, I don't. So guys, I just show you one example of the steeple top. So remember, the same thing applies to all of your other tops. So if you get the double top, you can have this elephant bar happen from the double one. That's how the double forms. Or the double can form with the double. You can have the left shoulder. So you can have this scenario, boom, where your topping tail bar is your top. So I'm just showing you one of the tops, but the three bar types ignite the top no matter which one you're dealing with. Okay? Steeple, left shoulder, double top, left shoulder, right shoulder, rounded. All right? So if you have a rounded scenario here, you can have an elephant bar, crack it. Boom. Okay? Like that. Or if you have the sideways, there's the elephant bar breaking the sideways. All right, so I'm just showing you one, but these three things typically kick off all the tops. They're the ones that ignite all the tops. Okay, good. Now, the most common top where you'll get 65% of what you're going to experience is what I call the clearing elephant top. This is the clearing elephant top, and I'm going to try to show you this with charts in just a few minutes here. The clearing elephant top is a solid, fat, bare red elephant bar. I'm going to give you a number here that cracks 5 bars before it. So 1, 2, 3, 4, 5. So if this in one fell swoop eliminates, wipes out 5 bars before it, let's say these bars were up, 2, 3, 4, 5, and in one fell swoop, boom, you eliminate this bar, 1, 2, 3, 4, 5 bars, all in one fell swoop. That type of elephant bar crack from a steeple top is like, wow. Okay? This is what you're going to see. This is the type of top you're going to see about 65% of the time. So all the others, like the topping tail bar, the double topping tail bar, that's less frequent than this type of top. This type of top you're going to see the most. It's the clearing elephant bar top. Okay? So here's the steeple version of it where you break 5. I want you to keep this number. You're breaking 5 bars to the left or more. It's 5 plus. It's not just 5. 5 plus. Sometimes that bar breaks 10, 12, 20, but minimum 5. Now let's go to the next one where you have a double top clearing elephant. Boom. Okay. Again, I want this bar to, at a minimum, break 5 former bars before it, whatever time frame you're looking at. If it's a 2-minute chart, then 5 2-minute bars. If it's a monthly chart, then 5 months. Okay? The time frame doesn't matter. The concept is the same. All right. And you can crack this way from a sideways base, clearing through. Look to the left. You're clearing to the left. Okay? One fell swoop, clearing out. Data to the left. Huge follow through rate. And these are the most common you're going to see. You're going to see it from the steeple. You're going to see that cracking, clearing elephant from the steeple, that cracking, clearing elephant from the double top, that cracking, powerful elephant from the sideways base top. All right? And that's what you're going to be seeing as a topping sign the vast majority of the time.